It's Monday, and a new week in crypto is getting underway. Here with all the top stories to get you up to speed, it's the Coin Bureau News. Welcome, everyone, to the Coin Bureau News. It is Monday, as normal, but as you'll probably have noticed, things are a little different today. For a start, there's two of us. Right. And for another thing, we are going live as well. What could possibly go wrong? My name is Guy.
And my name is Nick. And here's everything that happened in crypto.
So, macro conditions improving, inflation going down, rates soon to be cut, and consumer sentiment rising. Could there be light at the end of the tunnel for the crypto market?
ETH having issues. The rate of ETH burns falls to its lowest level in nearly a year. What's eating Ethereum, and should we be worried?
Institutional accumulation continues. Companies and other big institutional investors continue to stack sats despite the market downturn. Will this trend accelerate?
Memecoin hype over? As more and more meme coins flood the market and traders continue to lose money, has this crypto craze run out of steam?
WBTC gets FUDded. Wrapped Bitcoin's custodian announces a strategic partnership involving one of crypto's most controversial figures. How big a deal is it?
Uncle Sam's paper hands. More US government Bitcoin is spotted moving to Coinbase, prompting fears of more selling. Are the feds going to dump?
And a look at last week's top performing cryptos, as well as some dates for your diary and the best of the week's tweets. There we are. Okay, those are the headlines. So thank you for tuning in, everyone. Nick, how are you doing?
Great, man. I'm going live, man. Anchorman Coin Bureau style.
Here we go. Here we go.
Yeah.
Okay, so first story today, those macro conditions are improving. They're looking up.
They are looking up indeed. So last week we had three indicators to look at. One is obviously we had inflation, CPI, US inflation numbers came in lower than expected at 2.9% versus 3%. So that's obviously quite bullish. We also had retail sales for July. They came in higher as well. And weekly unemployment benefit claims also were lower than expected. So this obviously is, and then also there was consumer confidence index numbers that came in on Friday, which were the first time it's risen in 5 months. So all of these factors together led Goldman Sachs, for example, to say that they reduced their chance of a US recession in the next year from 20% to 15%. And of course, this means all stars are aligned potentially for a Fed pivot in September, which we're all looking forward to.
That is what we all want, isn't it? The Fed finally to pivot to cut interest rates. There's talk of them maybe cutting as much as 50 basis points.
Many people want that. So I've seen lots of analysis around it. So many commentators think that the Fed is potentially a bit behind the curve here and they should drop it pretty quickly because apparently 2 weeks ago we had that unemployment, the quick spike in unemployment, which led many to say, hey, the SARM rule has been triggered. Therefore, we're in a recession. Let's adjust. But the probabilities have adjusted. If you look on the chart there, this is the CME Fed Watch tool. So it basically calculates the probability of certain interest rate conditions based on futures instruments. And we'll see that it was 50% about a week ago. So even odds on that. And now it's come down to 30% of a 50 basis point hike. So the market thinks that the Fed is more than likely to be at 70% chance of a 25 basis point cut. So,
So we've got a couple of Fed-related things that we can keep a lookout for this week. On Wednesday, I think it is, we've got the minutes of the last FOMC meeting being published. So that'll give us a kind of glimpse behind the scenes of what the FOMC members are kind of thinking, what the Fed's sort of view on inflation is and where it's heading. And then Friday is Jackson Hole. The Fed and all the other central bankers are at their big sort of away weekend in Wyoming or something.
Soiree. All central bankers get together and party in Wyoming.
I bet that's wild.
I can imagine.
Absolutely wild.
Yeah.
So Jerome Powell will give a speech from Jackson Hole as normal, and that is going to be on Friday. And again, that will be watched very closely by market participants to see whether he gives any indication of whether the Fed is planning to cut rates. I mean, could he actually say a figure, or is that pretty unlikely?
I think you wouldn't want to reveal your hand. He'll use Fed speak, and they'll have to get that Wall Street Journal reporter, what the Fed whisperer, to decipher what he's saying, to translate for us. But yeah, it will all be based on whether he's making a more dovish or a hawkish, subtext, and that will then be used to determine whether it's going to be a 25 or a 50. But it's definitely going to be a cut. I think the market's positioned for that. I think he's even alluded to it.
Yeah.
So the question will then be how is his tone and everything at that meeting, and that will be used as a basis to determine how things are looking for September. But I would definitely, if you guys are watching at the time of his speech on Friday, watch how the probabilities adjust on the CME Fed watch tool. It's amazing how quickly they react.
Yeah,
in real time.
It's always fascinating to watch, isn't it?
Yeah.
And I get, people will be looking to see how many times Jerome clears his throat and what is
exactly. Where the subliminal messaging, and he's subliminally messaging to all the other central bankers there, how many things.
Now, the only other thing I want to mention in relation to the macro is those consumer sentiment numbers. Now, improving consumer sentiment does not suggest recession, and it also is kind of good news for potential alt-season bull market in crypto.
Of course, yeah. I mean, so if people are less worried about having to put food on the table, they're more likely to want to dabble potentially into alternative investments, including potentially dog coins and altcoins. But more seriously, obviously, it's good for the economy, because if there's improved consumer sentiment, it means there'll be more spending potentially. And this is the first time it's risen in 5 months. And it was actually, according to this Bloomberg article that was just on the screen, it was related to Biden actually stepping out. So they said that the consumers generally viewed Kamala actually to have more confidence in her in handling the economy than Biden. So it peaked up after that Biden stepped out. So the first time in 5 months, consumer sentiment is looking up.
Okay. And something else that's going up is global liquidity as well.
Yep.
That seems to be climbing.
We've already seen, as we know, the Fed is going to pivot in September, and then also other central banks have started their rate cutting cycle. So obviously this is leading to more liquidity, and you can see here on this global liquidity index from the Financial Times that we go through these numerous cycles, and it's starting to pick up, general liquidity, M1, M2 money supply. It's been making its rounds, and obviously more liquidity is good for all risk-on assets, everything from equities to, alternatives, including crypto, which seems to now have been placed into this risk-on bucket all the time now.
I wonder why.
The riskiest investment.
Okay, so final question regarding macro. The yen carry trade. Can we park that now? Is that done, or is that going to come back and bite us?
For the short term, yes, because the BOJ basically said, okay, we're going to delay the cuts now. Don't expect
short term we can park.
Short term we can. Well, I mean, it's going to. The thing is, it's basically because there's still going to be this differential, because the Bank of Japan has stopped increasing rates for now.
Yeah.
There's still going to be people coming back into the carry trade, because obviously they yield hungry, finance, TradFi degens. They will go wherever they can get that spread, right?
Yeah.
And as long as there will be this differential between what's going on in treasuries and risk-on assets and what's going on with the loaning in Japanese yen, they're going to move back into it. So we could be a situation where you start seeing the trade being put back on. So it's push the boat out, right? But that boat's going to come back to shore sooner or later. You just hope it doesn't crash into your harbor and destroy all the boats around you, because that's what it could do.
Yeah. So that's something to look forward to. The return of the yen carry trade psychodrama. Let's keep that on the long-term horizon. Okay, let's move on. So although things are looking better on the kind of macro level, when it comes to ETH, it's still struggling. Ethereum bashing is very much a thing on crypto. It's kind of the national sport on crypto Twitter at the moment. ETH's burn rate has fallen to its lowest level in almost a year. I should also point out, as well as this article from the block says, that also means that the fees on Ethereum are at their lowest level for a very long time, and we seem to be in this sort of oddly paradoxical situation, don't we? We got the low fees we wanted, but now the burn rate's gone down. Can't really have both.
It's a victim of its own scaling success. I mean, 2 years ago, everyone was complaining, it's unusable. We can't pay these fees. How can you expect them to onboard new users with such high fees? And then you had Denkun, and you got the layer 2s, and now layer 2 fees are dropping completely. But now everyone's complaining like, oh, there's no burn going on. Ultrasound money, no more. Inflation rates are up again. What is the point of using ETH at all? There's no demand on the chain. So it's a victim of its own scaling success. So I think that now the concern here is obviously with the inflation coming back. According to current trends, if the inflation rate remains as is, we will by the end of the year have inflated away the cumulative reduction we'd seen since the merge.
Wow.
So that's pretty interesting. So obviously now this is all a result, obviously, of main chain fees being so low. Many people will point to the fact, hey, this is potentially the layer twos. The layer twos eating Ethereum. Is this the case? And there was an interesting Coinbase report that was published last week that looked at the layer two landscape and what's to blame. And it's actually shown that most of the reduction in fees has come from a reduction in on-chain activity in ETH in terms of DeFi and general DEX trading, right?
Okay.
So it's not necessarily just the layer twos. Obviously, the layer two fees in terms of blob transactions has made it cheaper to settle from Ethereum layer twos, but it's this DeFi activity that's dropped off considerably in Ethereum main chain activity, which and that's potentially as a result of potentially layer twos, but more pointedly, like other layer ones.
Such as, for instance, Solana.
Yeah. So
obviously, there's been a lot of DEX trading on Solana. There's been a heck of a lot of Memecoin trading on Solana. Solana's had a lot of the mind share recently. So Ethereum's kind of being squeezed both by its own layer two ecosystem and also by rival layer ones, particularly Solana.
And that's just because of user experience on Solana is so much more seamless than trying to move towards a layer two. Think about a new user moving on to Ethereum, tell them the process to get onto a layer two, buy some ETH, go and start up your MetaMask, got to change your network, got to send it across a bridge, got to move it,
And there's just such a dizzying amount of layer twos as well. I mean, there are new ones popping up all the time. I mean, we did a video not that long ago about layer threes. More sort of app specific. So maybe we're a little premature in thinking about that, but there are so many layer twos now, and it's hard to keep track of just how many are hitting the market.
And it's atomizing liquidity across all these different layer twos. So it's this whole argument of singular monolithic chain like Solana, where it's no need for a layer two, versus Ethereum with all these different layer twos. So I mean.
Now, I should point out that the last time the ETH burn rate was this low, back in October last year, and sentiment around Ethereum was pretty low then, we then went on to have a kind of mini alt season, if you like. It really sort of kicked off from October, through until about sort of the spring, March, April of this year. So perhaps this is good news. Perhaps this is something we can look forward to.
Yeah, hopefully. Hopefully. I mean, I guess the main thing here is, are we going to see a return to the burn? Because that's going to necessitate people to utilize Ethereum again. What are retail going to come back to Ethereum and start trading again and doing a lot of DeFi activities the same way they did in DeFi summer of 2020? Obviously, we talk about the potential for RWA space. Institutions are issuing on RWAs on Ethereum, so it's the predominant one use case for Ethereum in terms. No, RWAs prefer to use Ethereum than other chains, but that's not going to drive massive transactional demand you need from retail traders, which is going to increase the burn. So if we're going to be in a situation where the ultrasound money narrative no longer exists later on, then that is one potential. It's just one. It's not the end of Ethereum. Obviously, it's not the end of the world. It's like, okay, it's got inflation. Many blockchains have inflation. It's unfortunately not that factor into your due diligence, and why an ETH is ultrasound money doesn't count anymore.
So the ETH bashing goes on.
It will go on, but
it is tough times for Ethereum at the moment. But there is so much development happening there, and as you say, possibly RWAs are going to come along and make a big change on what's going on the chain. You've got BlackRock with Biddle. Is it Franklin Templeton with Benji?
Benji, yeah, pretty
Biddle
cool.
Benji.
Biddle Benji.
Sounds like a sort of weird British TV show
name,
from the 90s. That probably throws up all sorts of concerns. Okay, let's move on. So institution. Okay, so ETH is having a difficult time of it. The market has been pretty choppy the last couple of weeks since it recovered after the yen carry trade fiasco. Now we're in a situation where kind of extreme fear on the sentiment index. However, we have plenty of companies, plenty of institutions that are going into the market, and in some cases actually issuing debt in order to do so.
Issuing debt, taking out credit to buy some Bitcoin. I mean, that shows conviction.
Really does.
One of those is obviously Marathon Digital. So it's a mining company, a Bitcoin mining company, and they issued a $250 million note to buy some Bitcoin. And the reason this is interesting is twofold. One is because they're a miner. Obviously, miners have a good sense of what the crypto market's looking like, and where the Bitcoin could be going, because they plan their whole business around this, right? It's predominantly based on what the price of your inventory is. Your inventory is Bitcoin. So that's the one thing. Then they could also just, if they are naturally long bullish, they think to themselves, I could just accumulate Bitcoin inventory and, I'll accumulate it on my balance sheet. But no, they've said, I want to accumulate and put Bitcoin on my balance sheet right now. I need cash to go and buy it. So I'm going to go and issue a note to do it. So it shows their conviction that now is potentially a good time to pick up some Bitcoin from a company that's whole entire business model is based on, selling Bitcoin or at least mining Bitcoin. So it's interesting to see that they're bullish on it, so it's a good sign there.
I think it says something as well about the state of the Bitcoin mining industry as a whole, though, because post-halving, there's been a lot of concern about the fact that smaller mining operations in particular are going to get really squeezed by the fact that the block reward is, has been cut in half. So the fact that a Bitcoin miner like Marathon Digital is confident enough to take on this enormous amount of debt in order to go into the market and buy more Bitcoin, that suggests to me that some miners, i.e. the big guys, are doing really, really well. But could this be pointing towards increased centralization in the Bitcoin mining space? And when you couple that with the fact that one of Donald Trump's sort of crypto policy lines of attack, if you like, has been to sort of bring, he wants all Bitcoin made in the USA, which is a whole other talking point itself. But I think it does say something about the state of the Bitcoin mining industry that perhaps we should be a little concerned about.
Yeah, no, of course. Centralization, it doesn't matter where it is, whether it was China back a few years ago and now potentially in the US, centralization of hash power is a concern because you never discount the potential for a state actor to ever try and control a network. And we don't know what things are going to look like in 50 years. 100 years. So
or even in a few months' time. It's everything's just so volatile.
But speaking of somebody who's been accumulating issuing debt to go and buy more Bitcoin, and you'll be shocked to hear this, absolutely shocked to hear what company's been doing that.
I can't even begin to imagine.
You heard a company called MicroStrategy?
Oh, it rings a bell.
Yeah.
MicroStrategy's been buying Bitcoin.
They've been buying, for quite some time, actually. You got to keep up with the times, man. So, anyways,
they start reading the crypto news more often.
They issued a $500 million. They want to issue a $500 million note as well, which will allow Saint Sailor to buy some more Bitcoin for MicroStrategy, just further turning his B2B software company into the world's biggest Bitcoin hedge fund. That's crazy.
Crazy story. Am I right in thinking there is an application for a MicroStrategy focused ETF has been filed?
Not just an ETF, a leveraged ETF. Leveraged ETF on MicroStrategy stock. Yeah.
Wow.
Yeah. So that's been filed as well. Pretty crazy.
Accounting for all sorts of tastes out there.
There we go. Yeah. Those degens, they got to satisfy those TradeFi degens. And then one more, of course, on the institutional accumulation side, is not just on spot, but we've had 13 F filings, which are disclosures that institutional investors have to file with regards to their allocations. And we've seen that institutional investors in the likes of Goldman Sachs and Morgan Stanley have been buying these ETF shares. Similarly, we've seen the same with Capula about 2 weeks ago, which is Europe's second biggest hedge fund. And, it's interesting. We've also got this Coinbase report, this Coinbase Research Insights, which basically showed that from Q1 in 2024, Q1 this year to Q2, we went from institutional share of the ETFs ETF shareholders was 6% in Q1. It's now at 9% in Q2. So it's just creeping up. Institutions slowly DCAing into Bitcoin ETFs.
Yeah. And of course, January the 1st, 2025, central banks will be allowed to hold crypto on their balance sheets.
Oh, which do you think will be the first central bank to do that?
Well,
if you were to hazard a guess.
There's a fair few already. But I imagine El Salvador will make some big announcement. Yeah. But Bhutan is where my money is. Bhutan is actually mining. They're mining Bitcoin because they've got a whole load of hydropower there.
Interesting.
And they're using it to mine Bitcoin. Bullish on Bhutan.
Bullish on Bhutan.
Okay, let's move on. I just want to quickly flag up a tweet. This was from Kelly Greer at Galaxy. I like this tweet. If you're depressed about crypto because stocks are almost fully recovered and BTC is still 20% from highs, consider that BTC has survived an absolute onslaught onslaught of supplies since June to the tune of $12 billion. And she calls them the four horsemen: Germany, Gox, Genesis, and the US government. And then she breaks it down for us. Germany sold 50k BTC back in June and July. Genesis bankruptcy saw 33,000 BTC distributed in early August. That was only a couple of weeks ago. Mt. Gox, of course, the massive overhang that everyone in crypto is worried about for years. 110k BTC has been distributed from that bankruptcy and doesn't really seem to have been as big of a deal as many people were worried about. And of course, the US government, which we'll come to in a bit more detail later on, they've been sort of periodically spooking the market by moving a whole load of BTC to Coinbase, presumably to sell it.
Yeah, it's crazy. And even with all that sell-in pressure, we still, haven't broke. We broke to below 50 just a little, 2 weeks ago because of the yen, spaz out. But this shows that if all this wall of selling coming on, and still Bitcoin is still, holding steady to a certain degree between, these levels, that's a sign.
Yeah, and a very positive one as well.
Yeah.
Okay, so moving on, the next story we're going to have a look at is the idea that perhaps, just maybe, the Memecoin train is running out of steam. Now, Memecoins have been the big story of the last few months, and I don't know about you guys watching. I don't know about you, Nick. I've certainly had the impression that it's all getting a bit ridiculous. You look at the top gainers and losers on a day-to-day basis. There's always some new meme coin in there, some new theme of meme coin. It was cats not so long ago, different sorts of animals. I've seen food,
celebrity
meme coins. That I think was a
and more unsavory meme coins. We won't say any more than that.
Oh yeah, I mean, not even getting started on some of those. So the meme. Yeah, there definitely seems to be a sense that the meme coin market is getting oversaturated. The whole sort of PvP nature of it is beginning to wear people out. Do you think is this kind of it? Are we in the last throes of this particular craze?
This particular craze, I think so. We're close to it. I think that there's a number of factors here. Obviously, I'm struggling to find, especially with these Solana-based meme coins that have been issued specifically on Pump.fun, and these meme coin generators, these basic meme coin casinos, just massive, pump and dump. It is what it is. It seems as if especially with the stats that we will show on the screen here, specifically as relates to Pump.fun launches on Solana. Look at that chart there. This data is correct. 60% lost money. So even if you're at the casino and you're playing even odds on a game, right, roulette, you still got more chance. 4.7 made no money. Only 0.5% made more than $10,000. That's crazy.
Yeah. Now I wonder who that 0.5% was made up of. I wonder what sort of people they were.
The thing is that 0.5%, even on the 3% level, to get that kind of edge, I assume you'll have to have some insider information of some description, right? So even if you are an insider in some way, right, in the meme coin game, and you get in $10,000, inside information is inside trading. Doesn't matter if it's a meme coin, doesn't matter if it's a stock. You insider trading, right? So it's like you put in at risk. For $10,000, you basically potentially committing a securities fraud in that way. If you are an insider, if you are dumping, if you are coordinating, I'm not saying all of it is, but if you are one of those individuals, you're risking a lot for a potential return like that. And from this, and how this relates to all the meme coins, is that it's hard to point to any individuals who've really made a lot of money or gained a lot from the meme coin hype, apart from MEV bot operators. Potentially other insiders, and then also just the Pump.fun, which has just been the revenue on Pump.fun.
Well, those are the guys who've been selling picks and shovels in the gold rush.
They provide the platform to do it. They allow them to do it. It's an open market. It's a permissionless protocol. People can get involved. It's just crazy. So, in terms of the meme coin hype, I think that with these sorts of stats, eventually people are going to, be rinsed out, and then people who've in that losing percentage, the 60% of traders, and according to that, they're eventually going to get tired and move away. And then unfortunately, they may leave with a negative perception of what you can do within crypto. Whereas if you just bought and hodled, Bitcoin, or just gone and looked at altcoins with utility earlier on before the meme coin season started kicking off in March, meme coin madness, you could potentially be in a better position right now.
But would you have had so much fun?
No, that's true. You would not. It is, and you wouldn't have been able to, laugh at, on what's been going on crypto Twitter with all of the meme coin launches, and some of it is hilarious. Some of those launches, I'm like, how quickly they can spin around a meme, right?
Yeah.
You know how you can generate a meme on Solana based on news events. Like what's if Trump will say something, then there's a meme, literally like a word said in a speech, a meme will be created immediately. Yeah. So it's a massive, it's very fascinating in exposition in human psychology.
Yeah.
But I guess it's also, and I think we should be careful around like meme coins, because we talk about meme coins, we've covered meme coins as well. There are some meme coins that have got longevity. There's meme coins that are institutional, like Dogecoin, some Pepe has been around for a long time. On Solana, even, I think, for instance, we've covered Bonk, right? And I think because there's a company behind Bonk, there's the developers, they're trying to, be a culture coin within the Solana ecosystem. But that's a different type of meme compared to the ones that are just there quickly. Let's make a bank, just spin it.
Some meme coins are not going away, but I think, the crazy phase of it where there's new ones, dozens, hundreds, thousands of new ones launching every day, that feels like it's running out of gas, and that's not necessarily a bad thing.
It's not a bad thing, and it's kind of like the NFTs market from 2021, right? Yeah. If you look at the exact same metrics you saw on OpenSea, it's going to, meme coins as a concept are cool to a certain degree. It's like just nothing but a meme, and you're trying to get attention, and you're trying to drive for attention to drive the price. Similarly, NFTs as a technology, there's nothing wrong with NFTs. It's a good technology, but obviously the hype itself has slowed down.
Yeah. And of course, I mean, there's now talk about new meme coin hype in other ecosystems. I'm hearing that Tron may be getting its own meme coin generator. Justin Sun getting in on the action, which kind of leads us very nicely into the next thing that we were going to talk about, actually, because Justin Sun is involved with this next story. Now, this is WBTC, wrapped Bitcoin. There's been some FUD around WBTC. This thing that has just kind of ticked along for years, wrapped Bitcoin, all of a sudden there's some FUD flying around the ecosystem. So this is because the involvement of a Hong Kong firm affiliated with Justin Sun is now going to be custodying most of the BTC backing WBTC. Is that correct?
Well, they will be custodying, so they will be holding one of the keys, right? So apparently there will be, it's a conglomerate, it's a multi-jurisdictional like new partnership that BitGo. So guys, just if quickly, like wrapped Bitcoin is obviously tokenized Bitcoin on Ethereum, right? And BitGo is obviously the custodian, which has previously held all three of the private keys. You need 2 of 3 in a multi-sig setup to mint and redeem WBTC with Bitcoin coming in and going out. So now there was this the concern is that this new partnership with BitGlobal that initially there was BitGlobal would be getting 1 key, and then they'll have a backup key. So essentially, BitGlobal could then is issuing in theory, right? And that obviously caused a lot of FUD and fear. People like MakerDAO said, "Are we going to stop allowing loaning of DAI on with wrapped Bitcoin?" You had concern. Aave also wondering if we're going to see how it plays out. So there was all this flying around. Justin Sun obviously said, "No, it's just I don't control the keys and all that." But there was these concerns, and then now they've settled on a situation where on a compromise where BitGo Singapore entity will hold one of the keys, the BitGlobal will hold another, and then BitGo, the US one, will hold third. But it's still, I mean, it's interesting because this is now BitGo itself as a company. 2 years ago they were potentially going to be acquired for billions. By Galaxy Digital, and now they're basically having to fight in forums and dispel FUD around WBTC, which isn't actually a very profitable business because you only earn money. You don't earn money for custody in the Bitcoin like you do for other institutions, because you usually charge AUM on that. But it's just mint and redemption. So it's not a profitable business, and now they're risking,
I think the guys on the chopping block were discussing this last week. And I mean, I think the figure that BitGo made annually from wrapped Bitcoin was something around $12 million.
That's nothing,
which is not really very much.
Yeah. So it's, so it's interesting to see that how things unfortunately have, progressed there.
Yeah.
But yeah.
And of course, the involvement of Justin Sun. Justin is a very sort of controversial figure in crypto. He's been involved. I mean, he is involved still with a lot of crypto companies. He's a very shrewd businessman.
He is. He goes for liquidity. He tries to find liquidity. He hoovers up that liquidity. He loves liquidity. He is a whale beyond belief in the Ethereum ecosystem when he moves around in Aave ecosystem as well, and obviously so many other crypto projects. Like, he's one of the preeminent whales.
So I think there are concerns that it's him. I mean, there's nothing to say that he would do anything untoward, and it's very unlikely. But I guess just the fact that he's involved has triggered a bit of FUD in some people. I
think it's that, but also the initial setup, right, where BitGlobal would have two of the keys. It's that it was a Hong Kong entity. Okay, and it's like, if, for instance, Chinese government says, well, give me those 2 keys. Yeah. So that's what the concern was. At least I've seen on the forums. I'm not saying that. It's just what's been seen in the forums. Yeah. And that's why they've got this third solution, which is, slightly better. Yeah. But it's interesting because this subsequent to that, during that same week, you see the tweet by Coinbase.
Yes. Yeah. Yeah. It was quite sort of cryptic, wasn't it? It was just what was it? CBBTC.
CBBTC. Yep.
Yeah.
And
so that, I mean, they must have taken advantage of all the sort of FUD flying around.
They must have,
because there wasn't any sort of further information on that.
No.
That we've been left to sort of guess at what that is, and that looks like a wrapped Bitcoin product issued by Coinbase and on its base layer 2, which is, I mean, going back to talking about layer 2s, I mean, base that has just been phenomenally successful.
Has.
So. It's more than likely, is it not, that Coinbase, if it goes ahead issuing CBBTC, in the next few months or so, Coinbase could capture most of that wrapped Bitcoin market.
100%. I think that it makes perfect sense. I mean, first of all, Coinbase is the predominant custodian out there. I mean, they hold in the Bitcoin ETF, the ETF Bitcoins, right? Yeah. So they know this game like no anyone. It will be 0 fees to mint and redeem because it's like on base. I do think that within 6 months or so, if we do see a CBBTC launching, it could overtake WBTC.
Okay. Well, watch this space. The wrapped Bitcoin space has gone from an absolute snooze fest to suddenly exciting again. After quite a long time, which is perhaps not really what we want. Sometimes we don't really want excitement in crypto. We just want certainty and security.
Yeah.
Okay. So next story is one that has been talked about before, one that comes up fairly regularly, and we're talking about it today because it seems to have been one of the factors that sort of spooked the market a bit last week. This is the US government once again selling, or looking like it's going to sell BTC.
Uncle Sam is cheating his bags.
Stop cheating
your bags,
Sam.
man.
Just chill.
Just hold on, man.
Yeah.
I mean, yeah.
So sent quite a lot of BTC to Coinbase Prime.
Yeah.
Now that's very much suggests that BTC is going to be sold.
Yeah.
So that is more supply hitting the market, and of course this is all Bitcoin that has been seized from Silk Road. And the US government holds a lot of something in the region of 200,000.
Yeah, like one of the biggest whales there are.
Yeah. So every time the US government, I think it was the US Marshals Service, isn't it?
US Marshal, yeah.
US Marshals Service. Every time they're spotted moving Bitcoin around, that is one of those things that can spook the market, and we saw that happen again this time. It's I think there's a possibility that this just could be part of a custody thing with Coinbase Prime.
Yeah, I've seen that. Yeah,
I mean there was a tweet from, I think it was Scott Johnson.
Yeah,
suggesting that actually no, this is not the case. That Bitcoin is almost certainly going to be sold.
Yeah,
and Scott seems to know more about these things than most people. That is another instance of the US government paper handing its Bitcoin. It doesn't seem to remember the fact, like we said earlier, that on the 1st of January it'll be able to hold it on its balance sheet.
Yeah.
There is talk, isn't there, that maybe this is happening ahead of the election?
Yeah, because coincidentally, it came just after. I mean, it's quite suspicious that these movements started just after Trump's speech around, we're going to retain all of the crypto we've held in the federal agencies. Although, to be fair, I mean, this was planned from a year ago. I mean, they had planned to sell the 50,000 over numerous tranches, and this was all disclosed last year. It was in the spring of last year, I think. So this was known to be coming. In terms of the questions around the concerns, it's just a custody agreement. Well, no, because I think according to the U.S. Marshal Service itself, they plan to sell this, right? So they said we're going to sell this. And if people say, okay, if there's just a custody agreement, why they only send in 10,000 and not the rest of the 30 to 40,000 they hold from the Silk Road? Or why aren't they sending all their Bitcoin to custody? Why they just send in this tranche? So it's most likely going to be sold at some point. It is what it is. We can't tell if it is sold. We'll only see something in terms of price potentially because it's on a centralized exchange. It's going to go through their order books or TWAP it or go and use some OTC trade or something. But
maybe another Tim Draper type will
maybe
want to step in
and just buy it all. Michael Saylor.
Michael Saylor. I'm sure Michael Saylor will take it off their hands for a good price. Okay, so that is the main headlines in crypto this week. Let's move on then to talk about last week's top performing cryptos. So we broke this down over the course of the week, and the top performing cryptos were Thorchain's Rune, Clayton's Clay, Helium's HNT, Aave's Aave, and Phantom's FTM. So let's start with Thorchain. Now, the seems to have pumped because of an integration with Lie.fi, a cross-chain liquidity provider. This is going to make Bitcoin swaps on EVM chains easier, and it could, according to CryptoSlate, could lead to more adoption of BTC in DeFi.
Which is good.
So that seems to be the bullish news behind Thorchain. Thorchain was also at the Rare Evo conference. That's the Cardano event in Las Vegas last week. I saw quite a few tweets from them at the event. They had a Cybertruck. I think
they had
them
a
and
Cybertruck.
Shapeshift had a Cybertruck.
Wow.
So
Okay.
I mean, that's bullish, isn't it?
Bullish,
Definitely. Okay, moving on. Clayton's Clay. Now, interestingly, Clayton is shortly rebranding to Kaya, and they just announced an integration with Abu Dhabi Global Market, ADGM, and the mainnet is launching fairly soon. So that seems to be the reason behind Clay's pump over the last week or so. Could also be hype around Korea Blockchain Week, which I think starts on the 1st of September.
Starting soon. And as we know, Korean degens are they're the craziest of them all, And it's although you said that they're not listed on,
I couldn't see listings for Clay on Upbit and BitHum and the like, but I guess that wouldn't necessarily stop real
it would not real degens
from trading it. Clayton is obviously a South Korean project, which would suggest it would be popular in South Korea. Okay, moving on. Now, these next two I want to talk about a little bit in tandem. The first is Helium's HNT. We couldn't find a specific catalyst for the reason HNT pumped other than sort of continued hype, not just around Helium, because it's one of these crypto projects that is actually seeing adoption and use. There's the partnership with T-Mobile recently, which is the one that has got everyone talking. And just hype around the deep in sector in general. So that seems to be the reason for Helium doing well this week. Aave, another one, recently recorded a new all-time high in weekly borrowers. And there are currently a couple of proposals going on there. There's a proposal to deploy Aave version 3 on ZK Sync, so another layer 2, which is going to pass pretty easily, seeing as no one has yet objected to it. That's DeFi governance for you. And there's also the fee switch proposal from a couple of weeks ago as well, which has helped Aave show a bit of strength. Now, the reason I want to talk about these two a little bit in tandem is because these are two apps, basically. And one of the big discussions in crypto at the moment, and I think a really important one, is the fact that we seem to have enough infrastructure. We don't seem to have enough apps.
Exactly.
And Aave and Helium are good examples of projects, as I said, with a lot of use that generate, certainly in Aave's case. I mean, Aave is a fee-generating monster.
It's a monster, It generated something like 6 million during that year in that yen
the
do
yen
unwind,
carry trade
and
wow.
it's seamless. And if there was the fee burn implementation at that point, it would have, obviously not the mint and burn mechanism they suggest in the buyback and burn. That would have obviously been a great accretion for the ecosystem. But I think that, your point around we just have an abundance of block space, but not enough demand.
Now we got to fill it.
Now we got to fill it. Yeah.
So it's good to see apps like Aave and Helium doing well. And the other big gainer of last week, the other scraping into the top 5, is Phantom's FTM. Now, Phantom itself is also in the middle of a rebrand. It's rebranding to Sonic. That seemed to be a part of why FTM itself was pumping. There's also, funnily enough, Meme Season Part 2 on Phantom seems to be underway at the moment as well. So that could be a potential catalyst.
Isn't Andre Cornier coming back to?
I think Andre Cornier is involved.
He's involved in it, but he'd Phantom. But has he come back into it as an advisor or something, like the original DeFi saint?
Yeah.
Is he coming back?
The patron saint of DeFi. I believe he's still involved. Well, we should stop calling it Phantom. We should call it Sonic.
Sonic. So Sapper back to Sonic.
Okay. Do you want to tell people about the notable events this week?
Yeah, so of course on Wednesday, as we mentioned before, we've got the latest Fed minutes released, which basically is when we're going to be what's happened subsequently, right? So it's going to be releasing what they had in their previous meeting. On Friday, another Fed thing, we've got the, as we mentioned, the Jerome Powell's speech at Jackson Hole, right? To get a sense of where things are going in terms of potentially dovish or hawkish stance on, what sort of rate we'll see in September. So that's on the macro side. And then on the token unlocks, in terms of upcoming token releases, we've got about 9.5 million or 2.41% of supply coming, or circulating supply coming on Avalanche in 16 days. And we've got, then after that, we've got 54 million, about 7% of Pixel supply is going to be coming onto the market. And then that's going to be in very close, pretty soon, 16 hours. And then we've got in 5 days, we've got some ENO circulating supply being unlocked.
Less than 1%.
Less than 1%. I think what's interesting, guys, is like you can't really see here, but you can, if you have a token unlocks account, a premium account, you can actually see where these unlocks are going in terms of like within the ecosystem. Is it going to the team? Is it going to investors? Is it going to the ecosystem? Because that all impacts on whether it's likely to be sold or reutilized. So, it wasn't on there, but you can see it if you get an account, a token unlocks, which we obviously have discounts for on the Coin Bureau Club if you're a Coin Bureau Club subscriber, which brings us to our next point, which is you want to share our next upcoming altcoin review.
That's right. Coin Bureau Club, we do a weekly altcoin review for our members, and this week will be Portal, which is a sort of GameFi crypto payments platform. We're doing the research for that at the moment. Very, very interesting project as well. So that's what's coming up on Coin Bureau Club. Shall we, before we go, just run through some of the best tweets from last week as well?
Yep, let's do that.
Okay. So first up, we've got Gwart. Retail is coming, well-adjusted adults with 9 to 5 jobs with monthly expenses and obligations. They're coming to trade digital commodities with us. That's what they're going to do. Just be patient. Retail is on the way.
Yeah, that's such a classic tweet. Yeah, I mean, retail is doing nothing more. They just cannot wait. All they just cannot wait. That's the thing after all they think about after their job, their 9 to 5, it's just, when can I start buying into Bitcoin? When can I start buying those altcoins? When can I go and join those crypto degens and buy their bags? Yeah. That's the first thing they think about. Not the economy, not their family, not consumer sentiment, not the election. When can I go and buy those altcoins?
Well, yes, let's hope so. Okay, next up, what have we got from Arthur Hayes?
We got Arthur Hayes. So obviously, Crypto Hayes, the Creole Crypto OG. And he's obviously, he knows a lot about this Japanese yen carry trade. And if you guys didn't see my interview with him about 2 weeks ago, it's pretty interesting. It covered some of the facts there. But he's mentioned here, a lesson in moral hazard. If the BOJ and Fed won't allow the dollar yen interest rate differential to narrow, the market will continue to pile on leverage. Bitcoin pumps in fiat system collapses, or if more fiat liquidity chases assets with finite supplies. Yahtzee. Kiss, kiss, kiss. Kiss, kiss, bang, bang. So, yeah, I mean, that's what I mentioned earlier, right? It's like if this interest rate differential is the factor that drives the carry trade, right? So,
so if there's an arbitrage opportunity, someone will
if you
jump
can
on.
earn positive carry between what you borrow in and what you yield in, you'll do it. The market will do it.
Yeah.
So, yeah.
Okay. Well, thanks in advance to all those traders who jump on that yen carry trade again and crash the market in X months' time. Thanks for that. Okay. This next tweet is from Kairos Research. BlackRock has more ETH than the Ethereum Foundation.
Wow.
Centralization much?
Centralization, man. Yeah, I think this is one of the concerns that people have always had, right? Initially when we started, and I assume that's because of ETF accumulation, right?
Yeah.
So, this is something we talked about, especially for cryptocurrencies that are proof of stake, right?
Yeah.
Because their staking power is determined by holdings.
Well, this is why people are more concerned about BlackRock holding a lot of ETH than they are
about
BlackRock
Bitcoin
holding a lot of BTC.
Yeah.
Could they at some point decide to stake that ETH?
Yeah, exactly. Yeah.
And actually, there's it's a BlackRock double header in the tweets this week. Arkham Intel, BlackRock overtakes Grayscale.
Yeah. First time, yeah, and that's just with its IBIT and Ether, and then this is Ethereum ETF.
Mm-hmm.
Grayscale's all of their minis as well, which is I think this is actually a positive sign because it shows Grayscale. Obviously, everyone's concerned about Grayscale because it's just the dumping of Grayscale, the unwind of the Grayscale. And in this case, now it seems like it's a turning point. Obviously, there's still about 21 billion to go on Grayscale ETF holdings, but I think that it will kind of normalize eventually because the ETF minis have cheaper fees and stuff like that. So they'll likely keep it in there. But yeah, it's a turning point in the sense that, we're going to potentially see a slowdown in the cheating of the bags or the ETH and Bitcoin from the Grayscale trusts.
Let's hope so.
Yeah.
Okay, and the final tweet this week is from Bob Lucas. I really enjoyed this one. Unpopular opinion. Bitcoin would be better served having an adversarial government for a while longer at this stage of its evolution. It needs to be further attacked by larger forces to harden the protocol, to awaken the cypherpunk spirit. We run the risk of consensus being influenced to a tipping point the further down the path we go of cheering government as being a savior.
Wise words. Yeah. So yeah, it's true. Yeah. It's true. I think it's we can't be slaves to BlackRock and find the TradFi industry.
Well, we've been we're being very quick to sort of applaud a pro-crypto stance from the likes of Donald Trump. We're kind of all hoping that Kamala Harris comes out and says something about crypto, ideally something positive. Obviously, there was the Crypto for Harris town hall last week, which I don't think really revealed an awful lot. We're certainly not really much further on. But that is not really in the spirit of Bitcoin, isn't it?
No,
that is not what Satoshi, I think, had in mind when he created it all those years ago.
It's got to be resistant to state actors. Yeah. Exactly.
Yeah. So I think Bob makes a great point there. Perhaps the Bitcoin protocol needs further stress testing before we can be 100% confident that it really is immutable and free from possible state capture.
Yeah, exactly. Yeah.
Okay, well, that is it for this week's edition of the Coin Bureau News. I hope you guys liked the new live format. It was certainly a lot of fun
enjoyable,
to do.
Yeah, it's enjoyed. Yeah. So let us know what you guys think about it in the comments. Do you want to see this format again? Do you want to see us in a suit and tie?
Yeah. Do you miss the suit and tie? Was that is it too much to deal with the fact that that's gone? Do please let us know. Thank you for watching, and we will be back again very soon.